Saturday morning to you, and welcome to On the Mark, along with Mark Pappa. I'm Gary Byron. Mark has a business. It's in Glastonbury. It's called Financial Resources Group. FR Plan. Get it? FR, Financial Resources? I know. I'm playing around with you. FRplan.com. You got to go to that website. It's got a wealth of information. Can answer some questions, but it may spur some others. That's good. Because he wants you to give him a call. You'll do a checklist. It's fun. It'll get you. It's so thought-provoking. Not only that, but just for coming in and doing this checklist with him, $100 gift card. No obligation. You don't have to, you're not paying for anything. There's no obligation. It's a double positive. It's a win-win. Here's that number. Write it down. Call it Make the no obligation consultation. Get your free $100 gift card. 860-657-8380. Again, it's 860-657-8380. By the way, Mark's got his own YouTube channel. There's a link on his website. But if you go to YouTube, just type in Mark Pappa, MarkPappa 5207. And you can catch a re-airing of this episode and all the other ones that we've done since, my goodness, late January, early February. Mark, good morning. Great to see you, my friend.
Great to see you. Time flies when you're having fun.
Doesn't it? Oh, my goodness. Doesn't it ever? Hey, by the way, happy belated Father's Day.
Oh, thank you.
How
thank
was
you for
that?
bringing it up. Oh, it's fantastic. I always love spending time with my son. He's, if it's throwing the football, throwing the baseball,
Nothing's better.
batting, basketball. He's a very versatile. So keeps me busy, keeps me young, and so I'm loving it.
You're a lucky man. How old is he now?
And then my dad too, spending time with my family as well. He's getting up there.
And I know your dad. Yeah,
he's still, he's aging well.
I haven't heard from him in a while. Is he doing well?
Absolutely, yeah. He's aging well, and he's taking care of grandkids. They're keeping him young, but he's still an active guy. He's able to move around, which is great. And he's active and he's alert. So keep your fingers crossed. It's a good sign.
I'm happy. Please tell him I said hello. I usually see him out and about in various stores.
Oh yeah,
things are going well for him. He must have you as an advisor.
Yeah, no, he's doing fine. He was his own. He's got a good head on his shoulders. He's always figured out the right direction.
You are launching a new tax planning venture, right, for high income earners, those with significant capital gains and business owners. I'm so delighted to hear this. So let me just ask you something very simple before we get into the meat of it, because you sound extremely chipper this morning. I can sense the enthusiasm in your voice already. What's driving your excitement about this new tax planning venture? And by the way, congratulations.
Well, thank you very much, Gary. Yeah, I have Glastonbury Tax Professionals, so that's the tax preparation business.
Right.
I will be working with my financial resource clients, or people close to us, or high net worth people who have tax issues. So I do not want to be a tax preparer. I'm tired of doing tax returns.
I know you've done enough of that.
I've done thousands of tax returns. I've seen so many different things to be dangerous, and I just can't do it anymore. I don't want to do it anymore.
Sure.
It's transactional. And then not only that, but the people who I do bring in look at me as like a data entry clerk. And I'm a portfolio manager, for God's sakes. I'm a tax, a wealth strategist. I'm not a keyboard. So I'm done pecking the keyboard. We have other CPAs to do that for us in-house. That they're more than happy to process your tax return. And then obviously I will review them because I'm not going to put my name on anything. But, for the clients that are ours, that are mine, I still will be doing them because I think it's important to be hands-on and have that intimate relationship with your client.
That's fair.
And, and that might be a smaller number. Or working with their CPA to help them with their tax situation as well. Or if they are the CPA and they do their own on TurboTax, let me sit down with you and figure out how we can handle this to best lower your tax bill. And we've done that multiple times already.
Really?
But this tax strategy business is just far well above and beyond. What really motivated me to do this was we had 3 cases this year where people, unfortunately, mom gifted the house years ago. Their cost basis on the house was $20,000 in the late 60s, or whatever. Even that was expensive back then, maybe the 70s. And they went and sold the house for $450,000, and now the kids have a very big tax bill. And if you weren't nimble, and unfortunately the advisor on that case just says, don't worry, mom's going to pay the taxes out of her account. Well, is that okay? Well, mom will pay the taxes out of her account, and then might take the edge off, but mom is still paying the taxes out of her account. Right. That's money you would have eventually inherited, money you would have gotten at a stepped-up cost basis, money that, taxes that should have never been paid. And unfortunately, they came to me after the fact. It was after 12/31, so they had sold the property in the prior year, and they had to pay a big capital gains tax on top of all their other income. So here you are in peak earnings years, paying a big capital gain that you weren't expecting or you weren't planning for. And I saw that in 3 different cases. The most recent one was a very large capital gain done in California, and they moved here. And it was a very large capital gain. They had made a lot of money on that house, but they were going to give away. They would have paid a giant chunk. I don't want to say the number, but it was in the hundreds of thousands of dollars.
Wow.
And we were helped to eliminate that tax bill.
That's awesome.
Yep.
So you've got 5 unique offerings for your clients. We got plenty of time. Let's break these down for us here.
Well, I would say on the tax planning, again, going back to like what Social Security planning is, the tax planning is we need to come in, we need to know what your problem is. I need you to sit down with me. I need you to bring a copy of the tax return. And the whole idea is we want to be proactive on your tax mitigation.
Right.
We can't do this after the fact, guys. You need to get ahead of this. The people who call me, believe it or not, it's July. I'm getting calls in July. Hey, I might be selling a business, or, oh, my mom just sold a house. We need help. We need it now. We're going to have a big tax bill in 2025. That's when you need to call me. You can't call me in 26. It's too late. There's no magician can wave the wand and help you. Once that happens, it's too late. Now, in certain cases, again, I'm waiting on this legislation. This is like the easiest layup. I'm waiting on the legislation to get passed, but qualified opportunity zones, especially for properties that don't qualify for, let's say, a 1031 exchange, we talked about a couple episodes ago. Mm-hmm. I wish those things were able to get renewed because you can defer your taxes for up to 5 years. Right now, it's only a year. It's expiring. We need to get that renewed. And then if you hold your money in that same property for another 5 years and the property sold, you pay 0 capital gains. That is a really awesome tax strategy. But unfortunately, it may not be around much longer. They also have one for oil and gas as well that you can get a nice dividend on. But, my point is knowing what to do, helping the client. Now, this last client I had, Gary, she didn't like oil drillers. She hated oil. She hated big oil. She was a climate change activist. And I had to pivot because the obvious answer was you can do a oil and gas drilling program, which has all been vetted with all the, and basically you're just drilling alongside the major oil companies in the Permian Basin. You can get a 90% upfront tax deduction on that, Gary. So that means if I had a $100,000 capital gain, I throw in $100,000 or $110,000. I just got $100,000 wiped off my tax, but I've got to drill some oil, and unfortunately,
she's not into that,
right? So, and that's only for accredited investors. I talked about that last time, but there are so many other strategies. So I was limited to like 2 or 3 solutions. Now I know about 12 to 15 solutions, and then some that are evolving. Some are solar credits. There's some awesome stuff out there that the tax lawyers have been able to put together that I'm super excited about, and we can help fit each client's unique situation.
What about if you're a business owner?
Business owners, the same deal. I mean, a lot of business owners get stuck with a big tax bill. Their business gets all these deductions. But, a lot of times I see people buying just buy more equipment. What if you don't need the truck? You're going to buy a $90,000 truck for the tax break? No. What if you don't need a $90,000 truck? What if that was last year's solution? And you're sitting around with a $90,000 truck. That doesn't work. So there are strategies you can implement that will make it so you don't have to buy the $90,000 truck and still get a nice deduction. Okay?
Yeah.
But, you kind of, again, you have to think out of the box and, review. Let me help you review one of these strategies. Now, the strategies that we utilize also, there is an AI, it's artificial intelligence, And the artificial intelligence actually decides which one of the strategies, it picks like 5 or 6, might be the best fit for your situation after reviewing your tax return. Now, very clearly, we're going to manually review your tax return after the fact and see what the AI decides.
So accurate they are.
Almost every time I have disagreed with the AI, but at least it does help you break down that you need a situation. If there's a big capital gain, one strategy is better to offset capital gains. But what happens if I have high income too? Mm-hmm. This one's better to offset the high income. So when you blend the two strategies together, it lowers the overall tax bill by a lot and makes it more manageable.
What about for estate tax strategies?
Estate tax strategies is a tough one, and that's more for a lawyer. So I don't want to get too deep into that. But, estate taxes, that's more of a strategy for gifting. You can utilize, we use donor advised funds. Those can be done through Schwab, and you could start doing your charitable gifts to those funds, and then those funds will disperse the funds to your favorite charities, and you get an upfront deduction on those.
Okay. Now, wealth management protection?
Wealth management protection?
Wealth protection. Wealth protection planning. How about that one?
Well, I think the biggest thing with wealth protection planning is figuring out ways to safeguard your assets. Okay. Especially if, one of the main things, for your average Joe, that's umbrella liability insurance, but I think that only goes up to a peak of $5 million. But anybody that doesn't have umbrella liability, and we talk about that as part of our full checklist, you're absolutely crazy not to have that for the extra, $500 or whatever it's going to cost you to protect yourself against lawsuits. But yes, there are estate planning and wealth strategies that you can utilize that I've seen people use. I've seen them use corporations. I've seen them use, one case I saw, actually I took a course on this where they utilized a holding company. And the holding company was just there, and then underneath were the operating companies. So if you got sued, they'd sue the holding company, but they didn't leave any money in, or something along those lines. Like it was an operating, but they never really left any money in. The assets were in other companies. So you had to sue that company first, but it had no money. So there's like all these credit shelter things. There's credit shelter trusts. There's all sorts of different things that I don't want to get myself in trouble talking about because I'm not a lawyer. But
let's go to
we put it this way. We can help you find that because of the army of lawyers that we work with some of the best estate planning lawyers out there. We can help them find ways if they are in a pickle. They want to meet, the easy way is maybe just protecting a kid against themselves, a spendthrift clause. There's other ways of protecting against divorce. That's a pretty common thing. And even in a revocable trust, you can do that. You can protect a child who might have a drug problem. There's all sorts of different things. But I think protecting kids from creditors or protecting your assets from creditors, you no longer technically can own that asset. Your trust has to own that asset, and then your trustee has control. What was interesting today, I don't want you to, the other day actually, my partner was telling me that Jimmy Buffett's
his estate and his wife.
Yeah. So you got to be careful who you pick. But he was paying himself this healthy salary. She's firing the trustee, and definitely there's some funny accounting.
Who was paying himself a healthy salary? Was it?
I think it was the trustee. I didn't really dig into it, but you have to be very careful.
And the wife fired him. Yeah. What about holistic coordination?
Well, I think the word holistic is, I probably should change that word holistic because everybody says they're holistic, and it means many things to many different people. Holistic, I'm holistic. So holistic might mean your guy does 2 or 3 things, 4 things, 5 things. I do an estate plan, and I'll look at your tax return, and then they'll do an income plan for you. I think holistic is more like the 21-point checklist, the full checklist review, looking at things like your home insurance, making sure there's, that there's no holes in the home insurance to where you get caught off guard, or, if your roof is over 20 years old, people are getting canceled and they're not even aware. There's all sorts of little things. So we do scrub through a lot of that.
Mark, that's a pretty impressive lineup. You really covered a lot of the bases here. So let's talk quickly about Planswell. How does this financial planning software, how does it fit into your services?
Well, just so you know, anybody that goes to our website, www.frplan.com, and it says Start Planning Now, will have access to the Planswell software. And again, everyone says AI is going to put me out of business. It's helping me. I use AI all the time. I use it for portfolio design. I use it for financial planning. I use it for tax planning. It is becoming, again, we're not relying on 100% on the robot, but the robot's what the robot does, it cuts down the time, the search time, the study time, and it creates efficiencies. So Planswell is an AI-driven kind of financial planning software where you go to a link, you enter your information, you tell me, okay, who you are, you're single, you're married, your income, your assets, your projected Social Security, whatever you want to put in there, and it will actually give you a plan to tell you, okay, do I have enough term life insurance? It'll tell you, oh, how much do I need to save if I really want to retire at 65 based on my income? Yeah, the one thing I hate about all financial planning software, by the way, and this is why I think financial planning is its number one flaw, are projections. So we don't rely on projections at all. We don't utilize them. We don't talk about them. We sit down with our clients each and every year and say, what's the plan for this year? Because we can't predict 5 years into the future.
Of course.
And anyone that says they can predict the future is full of it, basically. So we don't want to put that financial plan down on somebody's desk and say, hey, just do this and you're going to be a millionaire at 49. That's just garbage. So if you get one of those, please give me a call and I'll show you how to do it the right way.
I appreciate your honesty. Folks, you are listening to On the Mark. Along with Mark Pappa, I'm Gary Byron. Mark, of course, from Financial Resources Group in Glastonbury. You can check him out online at www.f, as in Frank, FRPlan. It's frplan.com. Also, write this phone number down. Ready? 860-657-8380. I'll say it again. 860-657-8380. Okay, and I'll repeat all of that more towards the end of the show. Look, I mean, I'm glad that you're bringing a lot of clarity to these complex, finances, but you're also offering Estately, right, as a complementary resource. What's that all about?
Well, again, this is kind of about I call it about the three-legged stool. Once you get through the full checklist, we uncover the benefits that you're owed that you're not aware of. Again, on average, $3,291 on a $250,000 household.
Oh, right.
You get your gift card. We're able to, if you come on board with us, Gary, not only are you able to get your free estate plan, Planswell, the actual financial plan, and that financial plan is very comprehensive, by the way. There's a lot of detail in there that will help people understand whether I'm under saving, when can I retire early. There's a lot of really good data that we can cull from that to help structure their financial plan. Estately is the legal part, so it's tax planning, estate planning, and financial planning. Now, the investment management is easy, guys. I hate to say it, but we've been doing that a long time. We design all our models in-house. We do that to keep the fees down, but we also keep it to make sure that we're not subject to some third-party committee halfway across the country. Most people, their advisors, or I've seen many advisors that just go to third-party models. They let someone else manage the money. And now, these are great advisors. These are, but these guys are letting someone else manage the money so they could just meet more people, let someone else manage money, meet more people. The problem is once you do that, you give up that control. You can't control the tax bills. You can't control, you might get good returns, but you can't control the tax bills. You can't really streamline that plan. So we make sure through what's called a portfolio to plan process, Gary, that, and it's on our website as well, that your portfolio is designed, whatever we put together for you based on what you tell us you want, that is custom to you, but that follows you not only today on a year-to-year basis, but throughout your retirement. And we get to tweak it once a year based on your needs and goals. So, but going back to estate planning, Estately is huge. So Estately will give your average person, let's say you take a married couple, they have 2 kids, they're young. They can go online and they become a client. Now, they can go online and start their own estate plan, whether they need a will or trust. We'll sit down with them and we'll help walk them through the checklist. We'll also help walk them through the estate plan, and that's through a company called Estately. It is a legal law firm in all 50 states, and I actually have had conversations with them because when we first started, I was trying to do a power of attorney for myself. And I said, I don't know how to answer this question. They put me on 20-minute call with an estate litigator from New York. There's not a lady I'd mess with anytime soon. And, she was wonderful, but she was a pit bull in the courtroom. And she gave me these pointers as to what not to do. So if you're married, so I didn't know whether to, if you set up a durable power of attorney, for example. If you're married, your spouse is automatically the durable power of attorney. You want to give them the attorney in fact ability. If you're not married, then you need somebody who you really, really trust. You don't want to give them carte blanche power of attorney right then and there. So it's called durable because what you do is you might say, I need at least 1 or 2 doctors to deem me incapacitated before this person's going to come after my money. So that's one. So I went through the whole thing, but you have to list your assets. And that's another thing I'll do is I help people gather the assets. Planswell is great for that because Planswell will actually gather all your assets so that when you go to do your estate plan, we'll be able to title your accounts correctly to avoid probate. So if you don't have a trust, and you just have a will, we'll also show you how to make sure all your accounts, your checking accounts, anything that's going to pay a death benefit or anything that's has the potential to get stuck in probate is not stuck in probate. And we really stress that a lot. We make sure that you have your titling correct, and it's correct so that you don't, another way, this is another thing people don't know. If they don't do their titling correctly, they can unintentionally disinherit their grandkids. And that's something that we want to make sure of. So I have a lot of experience doing this. And I really think it's one of the most important things. Now, what I'm going to be doing for our clients, existing clients, tell your kids about estately, because what we'll do is we'll give our clients' children a free estate plan.
Really?
Here's what happens.
What a perk.
What happens if, not only I'll update their power of attorney for them as well at no cost or obligation, and then I also pay to put their medical power of attorney up on that digital vault I talked about. I pay that out of pocket. So here's the deal. A lot of times, I don't know if you've known anybody, but I've heard stories about, let's say, that tragic story where one of the kids, maybe 20, 25 years old, has some assets, but passes away.
Oh, goodness.
Maybe it's in a dirt bike accident, a jet ski, or, maybe, had a little bit too much on the weekend, whatever the case may be. What does a parent do when their kid doesn't have a will, but they might have a bank account? They might have a little 401k start savings. They might have had a little bit of group term at work, and they never named a beneficiary on any of those assets.
That's a good question. I don't know.
That's adding insult to injury as far as I'm concerned, right? Because not only are you grieving,
it's going to go through probate, I would imagine.
It's going to go through probate. Yeah. You're going to have to set up a conservatorship. You have to jump through all these hoops. But what if you just made sure that your kids or your newly married child that just had a baby was able to come to me and get their estate planning done at no cost or obligation? Because it's literally just like them going to formerly before it was Estate Legaring. It was called freewill.com. So it's just like a LegalZoom. But you'll have LegalZoom. If we need to use a lawyer, we will make sure that you can. So
you're handling like asset distribution is really, it sounds like what it is.
Yeah, we asset distribution, and we also want to make sure people have their accounts titled correctly, but they have the right legal documents in place. Again, going back to updating that power of attorney once a year,
so
Gary,
important, yeah.
I have so many people who wanted to. I had a case where the woman moved her mom to California. Mom is incapacitated. Guess what happened? They wanted to pull some money. They wanted to utilize her long-term care payment stream as a way to get a mortgage because they were both going to move in together. Mm-hmm. The power of attorney was out of date. The closing was supposed to be on a Tuesday. It was going to take 12 to 14 days for the client to get the power of attorney updated. So guess what? They missed the opportunity to buy that house. Someone else bought it.
Oh, that's terrible.
And it was a perfect house for him. So that's my point. Like having that stuff done. And it's not like I didn't tell them they had to do this stuff. But the problem is that we procrastinate. We don't do these things when we're supposed to. I'm not here to crack the whip on anybody. I'm here to make you aware of what you need to do. And that's why exactly.
Final 2 minutes.
I would say to anybody who comes in, aside from increasing the income that we talked about earlier, reducing the tax you pay, we also have the retirement stress test. So we have our plans well. Mm-hmm. We have the estately. It's super important. These are incredible tools. So if I'm going to call myself financial resources, you're going to have the resources, Social Security timing tool. You're going to have the financial planning software that I think is second to none. You're going to have the ability to get a free estate plan at no cost or obligation once you become a client of ours. Or if you're an existing client, your children will have the ability to access our system. You'll have the full checklist to cover all those little things. And then also what I'm going to be doing is on a digital, going to be called the retirement stress test. And maybe next episode we'll talk about, we want to see how many people out there, because I know there's so many people that think you have it all together and you go to those seminars and you got your Vanguard account and you think you've got everything done and this advisor's not going to tell me anything. We're going to do the retirement stress test next episode, Gary, and it's called the 3 Little Pigs test. So the 3 Little Pigs test is anywhere between a 1 or 4 score. Your house is made of straw.
Oh, gee.
5 to 8, it's made of sticks, and 9 to 10, it's made of bricks. Bricks. And if you come to me, we're going to make sure you're a 9 to 10. So the retirement stress test, we're going to talk about that in the next episode, and all the different things. There's 9, 10, 12 different things.
Yeah, it looks like at least. Yeah.
So I can't wait to do that. But also give me a call, frplan.com. Go to my website. You'll find to the right of the DRC logo, you'll find the Planswell link. If you go to estate planning, it'll be a quiz whether you want a will or trust. But come in, give me a call, get that $100 gift card. Let's get the process started.
There's no obligation, right? They're not signing up necessarily.
There's no obligation. And here's your best news. I am not recommending a solution till at least the 3rd meeting. So all this stuff is discovery, Gary. It's get to know you. Let's get to really know you. And then let's come up with a solution. If you want to see me again, you want a solution, that's when we come up with the solution.
But they get the $100 gift card first meeting? No,
second meeting,
checklist, and okay.
Give me the opportunity to help you get that.
All right, it's win-win. If you missed any of this episode or would like to maybe listen to some of the previous episodes, head on over to YouTube. Mark's got his own YouTube channel. It's Mark Pappa 5207. That's MarkPappa 5207. He's got a link, by the way, to his YouTube channel on his website, which is www.frplan.com. But that phone number to schedule that no obligation consultation, get your free $100 gift card, 860-657-8380. Again, 860-657-8380. For Mark Pappa from Financial Resources Group, I'm Gary Byron. Thank you so much for listening to On the Mark. Until next Saturday morning, have a good one, everybody. So long.